Welcome everyone to Vested Interest. This is Shane back for a Stock Pick of the Day video. It is Monday, January 13th. We're going to take a look at Edison International. This is out of the utility sector. Before we get too far in the video, if you could do me a big favor, hit that thumbs up button down below if you find any value in the content. Make sure you're subscribed to this channel. Join us on this journey to financial freedom. Join the Vested Interest community. Click the notification bell so you're notified whenever we put out any new videos. I do this Stock Pick of the Day video series Monday through Thursday when the market's open. We take a look at a company stock that's pulled back on the day to see if it is presenting any value. Run through some criteria we'll see here in a second and see if it makes it onto my watch list. A special thank you to the subscribers of the channel and the viewers out there. The channel continues to grow because of people like you. And there is the thanks button down below if you want to help out the channel. All donations will go into 3 piles, split between my daughter's custodial accounts and my account as well. And any funds that I do make, I will be sure to share those on the channel. And again, thank you to everyone out there who's capable of doing that. And I understand those of you who are out there that can't. Times are tough for everyone. We all have bills to pay. Now, this is the Vested Interest Stock Screener. This is the criteria we will be running through on the video. It must meet 5 of 8 to make it onto my watch list. Again, this is a screener. This does not mean I am buying the company, even if it makes it a 5 of 8 and makes it onto my watch list. It just means I am interested in doing more of a deep dive into the company. Thousands of stocks out there in the market. This is a quick way for me to go through and see which ones I'm interested in doing more of a deep dive. Also, some criteria I can put together whenever I have positions in my portfolio if I want to do a quick back check and make sure they're still meeting initial screener. And if not, then I probably need to look at a little deeper detail into their financials and make sure they still are meeting the criteria I have for them whenever I purchase them. So it's a back check on the existing positions. It's also a initial way for me to check on positions I want to do more of a deep dive into. So again, if it makes it onto my watch list, that does not necessarily mean I am buying the company. Now let's get back to Edison International. Check them out on their homepage, www.edison.com. That's www.edison.com. That is their homepage where I pulled this information from. A look back at our history. Edison International is the parent company of Southern California Edison SCE, a regulated utility, and Edison Energy, a non-regulated energy service company. While SEC was officially incorporated in 1909, the company was originally formed by the mergers and acquisitions of many small predecessor companies going back to 1886. Due to the short duration of patents at the time, Thomas Edison allowed electric utilities to use his patents if they used his name. This is why there are many utilities which include the name Edison but are not affiliated with each other. So there are a lot of Edison companies out there. I actually assumed they were all part of the same parent company, but apparently not. And then these are some of the companies that fall under the Edison International brand. Southern California Edison, Edison International subsidiary. Southern California Edison is one of the largest electric utilities in the United States and a longtime leader in renewable energy and energy efficiency. And they are all going towards renewable energies. Don't let anyone tell you otherwise. If you look at investments by the oil and gas industry, even a lot of Exxon Mobil, Chevrons, they are investing in renewable energies as well. So utility companies, energy companies, they are all going green. Whether you listen to the news and there's some negative news about that, they're all heading that way. They're all investing in renewables. That's where the transition will come over the next 10, 20, 30 years. Definitely in my children's lifetime, maybe not fully transition in my lifetime or your lifetime, depending on how old you are, but there is a transition to renewables and companies are doing it. It's not necessarily driven by the governments. They are just doing it because they see that's where the future lies. Next up, Trio. Trio, formerly Edison Energy and affiliated companies, Allentex Energy and Alpha Energy, is a global sustainability and energy advisory company that helps large commercial, industrial, and institutional organizations navigate the clean, there you go, the clean energy transition. So again, they've got a whole group that's out there going around the world helping companies do that. So in sustainability, renewables, energy procurement, conventional supply, energy optimization, and transportation electrification, Trio helps the world's largest organizations meet their strategic, financial, and sustainability goals. Again, check them out on their homepage, www.edison.com. And the reason we are taking a look at them down 11.89% on the day, we are talking about Edison International, ticker EIX, out of the utility sector. Closed out the day at $57.27. Looks like they're up in the after hours slightly, at least whenever I pulled this information. 52-week range as low as $55.27. So they are very close to their 52-week low, as high as $88.77, with a market cap of $22.172 billion. Now they do have a beta of 0.94, so they are just slightly less volatile than the overall market. The market is one. Beta is the volatility of the market. When you see that beta, that's what they're talking about. So when the market goes up and down, that's the volatility, and this tracks the volatility. So just slightly less volatile than the overall market. PE, price to earnings ratio, is sitting at $16.75 per share. EPS, earnings per share, is sitting at $3.42 per share. They do have an earnings date coming up sometime between February 20th and February 24th. Forward dividend is $3.31 on the year. I believe they're a quarterly payer. We'll see that here at the end, with a very high starting dividend yield of 5.09%. Ex-dividend date is January 7th, or was January 7th. We're already past January 7th, already halfway through January. It feels like yesterday was New Year's Day, but here we are, already halfway through January almost. So January 7th, looks like they're going to pay out on the 31st. So you would have had to buy them on the 6th or before, January 6th or before, to get the next dividend. And kudos to those of you out there who are in line to get that dividend on the 31st. 1-year target estimate, at least according to Yahoo Finance, they see it going back up to $87.93 per share. That is not quite back to its 52-week high. Now, jumping over to the right, I like to look at dividend yield theory to see if the company is potentially presenting any undervaluation. It's a quick back check on the company without jumping into its financials. That's why I look at it. So to do that, to look at dividend yield theory, we look at their 5-year dividend yield average, or if you had 10-year dividend average, 7 years, whatever you want to look at. I look at the 5-year dividend yield average of 4.25%. We compare it to the current 5.09%, or over here where it says forward, same number, 5.09%. And since the current dividend yield is higher than their 5-year average, that speaks to undervaluation. They are inversely correlated. So this number being higher means undervaluation. If this number was lower than their 5-year average, that would speak to overvaluation. So right now, Edison International, according to dividend yield theory, is potentially undervalued. Now, I don't like this. Their payout ratio is elevated at 91.23%. Most utility companies are, though that is pretty high. You have to start worrying, is there a payout or a dividend cut in the future? I like under 75%. So this is a little high even for me. We went over their ex-dividend date already. We're going to drop down and look at free cash flow. I like growing free cash flow over time, because typically if a company has growing free cash flow, they can pay down debt, they can make acquisitions, reinvest back into the company. They can buy back shares, they can pay a dividend, and one of the things I like about companies with dividends, they can raise them over time. So we want growing free cash flow so they can do all of those things. Now, a lot of times when you're looking at utility companies, you're going to see a lot of negatives, and that's why you're going to see that here as well. So nothing new here. Going back to December 2021, negative $5.4 billion in free cash flow. 2022 is negative $2.5 billion. 2023, negative $2 billion. Trailing 12 months, negative $969 million. So even though they are negative every year, they are actually growing their free cash flow towards zero, I guess you could say. They are repurchasing shares, at least over the last couple of years. 2023 saw 289 million shares taken out of the market, and then trailing 12 months, 2024, they took out 667 million shares out of the market. All right, we're going to jump over to stockanalysis.com. That's another source I go to for information, and I do recommend more than one source so you can make sure the information you are looking at is accurate and up to date. They do have 14 analysts that have taken a look at this. They call it a consensus buy. They do have a low estimate of $69. It currently sits lower than their lowest estimate, and if it came back up, that would be a 20.51% increase from where it currently sits. Average estimate of $85.04. That's pretty close to what we saw with Yahoo Finance on the previous page. That would represent a 48.53% increase from where it currently sits. And if it happened to hit their high of $100 estimate, excuse me, that would represent a 74.66% increase in the stock price. All the while, you could collect that 5+% dividend yield if you were to buy them now and lock that in. Now, I'd like to look at statistics and look at return on equity and return on invested capital to see how well the company is reinvesting its capital back into the business. We're going to jump over return on equity. I like 10% or better here. They're at 7.41%, a little lower than I like, though utility companies typically have a low ROE and ROIC just because they are very capital intensive. They're constantly having to start new projects, do maintenance on existing projects, whether that's existing utility lines, whether they're wind, solar, maintenance, or new projects like that. So you usually see, and sometimes it takes years for the returns to happen, so you usually see pretty bad return on equity and return on invested capital for utility companies overall. So I typically compare these to other utility companies, right? But return on equity at 7.41% is under the 10% I look for there. Return on invested capital, same thing. At 4.59%, that's under the 10% I look for as well. So I wouldn't put a check for either one of these. There, you got to hit both over 10% to get it anyway. EPS forecasted growth, I like 5% or better forecasted over the next 5 years. They did not have anything listed, so I can't say that they have over 5% or under with nothing listed. Their revenue growth is forecasted to grow at 4.04%. Jumping over to their dividend history, they are a quarterly payer. Payout ratio, again, elevated. They're saying 96.94%. So even a little higher from stockanalysis.com than what we saw from Yahoo Finance. Either way, it's well over the 75% that I look for. So you want to keep an eye on that if you own this company. Dividend growth is still growing at 5.81%. So they are high single digits, still growing that dividend. I'm questioning whether they should be doing that if the payout ratio is so high. But again, these type of companies are very capital intensive, and typically they get some pretty nice tax benefits to go along with it. So even though they're showing negative numbers, you'd really have to dig into the books to see if that's kind of hidden because of all the amount of money that they reinvest back into the company, doing upgrades to the facilities they already own, or maintenance to the facilities they already own. Buyback yield is negative 0.52%. You actually want to see that positive. You want a company to be buying back shares whenever the shares are cheap. If it's negative, it typically means they are not doing that. Shareholder yield is positive, though, at 5.37%. Now, they do pay out on that January, April, July, October timeframe, so it's off the schedule that most companies pay out their dividends, so I do like that. They, going back to July 2022, were paying out 70 cents per share. They raised it December 2022 up to 73 cents and some fractions of a penny there. Raised it up December 2023 up to 78 cents. The most recent raise was actually this payout that's going to come in January at 82 cents and some fractions of a penny. So kudos to those of you out there. I would not expect another dividend raise till December of this year or January of next year. All right, let's check out the screener here. Understand the business. They're a utility company. That's where we started. Growing free cash flow. They do, even though it's negative, it is going in the right direction towards zero. It would be nice if it was positive, but it's not. Growing and possibly, actually, if you look at their repurchase of shares the last couple of years, it may have been positive or very close to zero anyway, but it is growing. Growing dividend, yes, they do have a growing dividend, high single digits, 5.8% was it, but I'm questioning whether they should be doing that with such a high payout ratio. Dividend payout ratio is over 75%, no check there. Dividend yield theory says this one is potentially undervalued. It is within 15% of a 52-week low. It's right up against its 52-week low, $55 52-week low, and it's currently at 57. Return on equity and return on invested capital, neither one was over 10%, and they did not list their earnings per share growth, forecasted growth over 5%. They didn't have anything listed, so can't say for sure there. But they did get 1, 2, 3, 4, 5 out of 8. This one does make it on my watch list. Let me know what you think of Edison International. Is it on your watch list? Is it in your portfolio? Or are you part of the reason it's down 10% today because you're selling out of it? And what is the reason for that if you are? Well, that is it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up. Ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. And drop a comment down below. Let me know what you think of the video. Let me know what you think of Edison International. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like Edison International you would like me to cover in the Stock Pick of the Day series, drop it down below. I'll try to work into the rotation. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great week, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I am only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can lose money, and should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.